Alrighty, we are live from Columbus, OH, and this is the Ramsey Show After Show. I'm Coach Steve Money, and you're watching this on youtube.com/Coach Steve Money, obviously. And for my financial content, you just scroll down. Alrighty, we are live from Columbus. Oh, and I'll mute that now. Just want to make sure we were going. On that webpage, on my homepage, you just scroll down past the Oak Island website and you'll see the Ramsey Show After Show playlist. And again, it's done from episode 1 here. Again, I forgot to change it. Normally it has the last episode, and today is episode number 480. So I've done those for a minute. At least one new Ramsey parody-esque kind of song will be done on episode 500. Maybe two of them, because I had two really great ideas recently. And so I will be working on those tonight, actually. Also, the Answering Your Financial Questions playlist as well, in addition to the Ramsey Show playlist. And the music playlist has 11 already existing of those Ramsey adjacent parody type songs as well. Example, how to do the baby's dibs right. Alrighty, market report. Oh, happy Valentine's Day to everybody. Marshall, what up? I should have put a Valentine's thing on Valentine's Day graphic on there. I forgot. Maybe a nice Star Wars one, perhaps. And oh, look at that. The NASDAQ, the only thing up today. And this is why you don't want to just be in the S&P 500, as I always say. So the market would be, oh, it's not up. About even, maybe up just a little bit, because if you add all these, 0.37, so that's 0.377 then, and then, so that would only be like 38 something. So, you know, if you're all even on stuff, that should be just a little bit up then overall. But you should definitely have NASDAQ, and all those companies would be in your good large cap mutual funds, which you should have. And NASDAQ is mostly the tech stocks. See what the rest of the planet did today. Mostly down in Europe, mostly down in Asia. As far as the US dollar, euro is higher. Japanese yen is higher as well. The British pound, love, the bloody quid is higher. The Canadian dollar, sorry, that's higher. And the Australian dollar, mate, making it a clean sweep. US dollar wanted to be higher, but the Australian said no. So the future's looking like for Monday, and basically the same. NASDAQ up a little bit, and S&P and Dow both down. All right, and so, but like will happen by Monday, I'm sure, because you have the rest of the after hours trading today, and then you'll have the before hours trading on Monday morning. Apple is up. Meta is up. The rest of them, Tesla, a 0.028% change, and that's probably the lowest amount of change that they've ever had. It's probably a record for them, because normally they're very high. They're normally like above 3% up or down. Very lot of movement for them. Either way. And so the rest of the most followed single stocks on the Google are down, including Google owner Alphabet, the Microsoft, and the Amazon down as well. And no reports. Arista Networks, I don't know I don't know what that is. There's a record label called Arista. I don't think that's around anymore, though. Let's do some news. Retail from CNBC. Retail sales slumped 0.9% in January, down much more than expected. Slipped 0.9% for the month from an upwardly revised 0.7% gain in December. Worse than the Dow Jones estimate for a 0.2% decline. Yeah, and so this is why I don't really understand if they always have to revise these things. Why put out the number early? Why bother? Why bother? Especially if it's going to be as wrong as this is. Excluding auto sales, autos prices fell 0.4%. Also well off the consensus forecast for a 0.3% increase, while the control sales group slid 0.8%. Import prices accelerated 0.3% in January, in line with expectations for the largest one-month move since April 2024. So what else we got? Also from CNBC, from the tech section, Zuckerberg's rightward policy shift puts Meta staffers on edge, targets Apple. You know, I don't know what's going on with Marky Mark Zuckerberg. Maybe he just floats whatever way the White House is floating at that particular time. So I don't know why he's embracing right stuff now. Don't know what happened with that. I don't talk to him. He never texts me anymore. So, you know, I got all attitudey Judy, and so I don't know why he's doing that. But you know, may just be following what's happening now, and we'll switch again when the opposition gets in control again of the White House. There's some CNN World in the United Kingdom, the bloody UK. Man who lost $800 million, not quid, in a Bitcoin in landfill, wants to buy the garbage dump. All right, and so basically, so 800 million in Bitcoin, and I did look at this one before. He threw away the hard drive that has the information on it that allows him to access it. And so I think they call that like a key phrase or something like that. But so he has that there, and he wanted to buy the landfill site, and he has funding for it. Don't know if somebody's lending it to him or what. He was going to buy it for more than 70 million. Oh no. It was just to dig up the site, permission to dig it up. So yeah, so it's a landfill, and so as you can see, it's got, you know, green. It's already covered from the they put the trash underneath it, and then they cover it with soil and grass. And so, but that's nutty that you would throw away that. Although, when did it say he threw it away? Threw the drive away in 2013. Hey, guess what? The Bitcoin wasn't worth much back then, so it wasn't as big a deal. But now it is, of course. So, but yeah, don't do that. You might want to hold on to every hard drive until you make sure you've gone through and gotten everything. At least get, you know, everything out of your documents and pictures folders if you want all the pictures, of course. Oh, we thought it was a blank drive that contained no data. Well, that's what you get for thinking. Don't think, confirm, always. That's one of the Gibbs rules, I think, something like that. Don't ever take anything for granted, always confirm, something like that. Gibbs has a couple good rules. Yeah, accidentally throw away 800 million. Well, I mean, when he threw it away, it wasn't, though. It was, let's take a quick look, shall we? Just to be just being interested. Bitcoin. Let's go to max here. Oh, that's not even on the, so you see, this is all relative to what it is worth now. So like you see, it's right here at 0. So this is like, this is at, what is it? 473.31 is the 0 amount here. And that's 2016. So 3 years even before that. So it's not nearly worth the 800 million that it is now back then. Nope, that's not what I wanted to do. I wanted to go to, did I do that? Yeah, so, good luck to him. I don't know. They probably don't have to let him do that ever. There's probably nothing that he can do legally to get access to that. And hey, next time, be more careful. The Wall Street Journal says we're headed toward a landlord-friendly era, so expect higher rent prices. Prospect of rising apartment rents could further stoke inflation and give the Fed another reason to pause. All right, we'll see. Fed be doing Fed things all the time. This from, where is it from? Oh, Investors Business Daily, duh, which is investors.com. Oh, they got investors.com. Very nice. Technology section, NVIDIA dumps SoundHound, trims ARM stake, buys these two stocks. Well, let's see what they bought. Nebius Group and WeRide, never heard of them. Maintained Applied Digital and so this is interesting because this is a company, a very highly valued company, and one of the richest, and they also, as a company, they invest in stocks themselves. So they're a stock and they invest in other stocks, which affects their stock. So that's interesting. That's like stockception there. So like a stock within a stock within a stock, that kind of thing. So interesting. I just thought it was interesting and would share it. Also, what I thought was interesting, and I thought would share this from the TikTok. I don't own it, but you don't have to log in, I guess, to see something from this link. And so, where did I hear about this? I think, on a podcast earlier today. In Brazil, hundreds of spiders are floating around. It says they rain down from the sky. Oh, let's kill the music. Watch a little bit of that. Spiders, fun, fun, fun. That would not be great for me. Where's John Goodman? Would you? Oh, that's right. John Goodman did not make it to the end. Sorry for the spoiler alert. Did not make it to the end of the movie Arachnophobia. And yeah, that's been out 30 years or so. So you've had time to watch it if you were going to watch it. That's right, spiders. Marshall. And we go, where we go for questions? We go to reddit.com/r/Dave Ramsey. And we sort by new, and then I scroll down to where I left off, and I start at the bottom to make sure I don't miss any questions because I do run out sometimes. So that's why I go to the bottom. We did this one yesterday. Do you stop retirement contributions while paying debt? That's a yes. Don't have to read any of it. It's always a yes. There's never an exception for that. And that's the beauty of the Ramsey advice, because any of your even ifs don't change it. You're either doing it, or if you have some kind of emergency, you pause the baby steps and you just pile up cash and take care of that emergency. But then when the emergency's over, then when you go back to the baby steps, you pick up exactly where you were before. And so, yes, because paying off debt is baby step 2. And look at this. Not even the next baby step up. 2 baby steps later would be investing. All right, let's see what this one is. From Capital Web 6255. Speaking of spiders, they probably have Capital Webs. And I've got such a long way to go, such a long way to go. It's a long one. Let's open up the rest of it. Hey guys, hi guys. Doing my influencer greeting there. Not really sure what to say nor type here. It would be typing. Since this is my first time ever posting something on Reddit, but I felt like for me sharing my journey from the start and see where it brings us. Okay, let's do it. About me, currently 24, from the Netherlands. I don't know what kind of accent they would have. Maybe I'll look that up later if I remember. Living on my own, on your own. Used to have a company which left me with department, is DEPT. From the Netherlands, though. I'll give him a... What language do they speak there? Do you know, Marshall, what language they speak in the Netherlands? Left with debt. Still not 100% sure how much debt there is. I would look into it. Other people are figuring that out, estimating around $50,000, okay? Or whatever their money system is there. For the first time in 5 to 6 years, I got myself an actual job. Lord loves a working man with a stable income. Horses don't have to be involved. Bad joke. Possibility to earn a bonus as well. Great. Today I moved from sharing a home with a friend to having my own place. First thing I did was create a budgeting plan. That is excellent thinking on your part to do that. The plan probably needs tweaking. Yeah, if you haven't budgeted before, you're probably not going to do a good job on the first one. So, but give yourself 3 months to get into the swing of it there, because a lot of people, if it's their first budgeting, that means they're probably not paying attention to finances at all, which means you might see the price of something in the store. You might see the final price at the grocery store when you're paying. You might see that, but then it just goes out of your mind and you don't think about that, and you're not really sure how much money you have, etc., etc. And so it can take a while to get that budget happening correctly where it works out. Because yeah, a lot of people like miss, they go from what they actually are spending at the grocery store, they go down to a much, much lower amount, which is not realistic in some cases. But living by yourself, you should be able to get by with not spending that much money at the grocery store. Maybe some budgets need to be higher after a month. Yeah, you'll figure that out. Maybe some need to be lower, right? I'll revisit the plan after the first month, right? And that's what you do. And then you'll get better of it generally around 3 months. Most people get it close. Before I can start my Dave Ramsey plan in steps, I need to pay a family member $2,000. I loaned some cash. You borrowed some cash, but again, Netherlands, so unless you mean, yeah, I'm assuming does mean need to pay, and so that's a loan from him to you. You did not loan the cash. After that, I can create my emergency fund and start snowballing other debt. I see what you're saying. There's other things to do. Baby step 0, it's not actually on the baby steps, but there are other things, which is like get current. You don't have to be, you're living by yourself. Don't have to be on the same page with anybody. So you can skip that, but you need to make sure you have the essentials, which probably you do already. But yeah, so if you want to, I would get the $1,000 emergency fund first. If that means if you go ahead and pay the family member 2K and then some emergency happens, then you would put it under debt, then I would get the emergency fund first. And then you can make the family member the first debt on the snowball, even if it might not be the smallest, which at 2K, it might be the smallest. So, but hey, don't borrow any money anymore, especially from family and friends, even if you are in the Netherlands. After that, I get, create my emergency fund and start snowballing debt. For now, I'll be expecting to be able to allocate 1K a month to my debt. Great. Try to work more and make it more. Once the monthly bonus, and you can cut stuff out of your budget. Cut it as deep as you can. But only buy stuff that's 100% necessary. It's just for a short time while you get rid of your dumb debt. Once the monthly bonus starts rolling in about 2 to 3 months, I would assume, don't assume I can allocate 2 to 3K a month. Right, okay. Yeah, but you should, you can never say that. You can never trust that because something might happen where they cut out bonuses right when you're supposed to get one. That would really suck, of course. Not really know what to expect from posting this, but felt like sharing. Okay, that's great. Some people need, and so you got some people chatting with him. A couple people, looks like, or at least one, and they went back and forth. But yeah, I don't know. Marshall doesn't know, or isn't paying attention now, or isn't paying attention, or does not know what language they speak in the Netherlands. Trey 25, 32-year-old with 2 houses and a boat but no savings. Hey, I know what we can do to get some money for savings. You can sell one of the houses and the boat, dog. How about that? So, and that should be one of the baby step 0 things, is you undo the dumb crap that you shouldn't have done previously. For example, if you got a car loan and you start the baby steps, you can start with selling the car immediately. I mean, you can do that as a part of clearing out debt and baby step 2 as well. But yeah, I mean, you would do the $1,000 emergency fund first, and then you would start selling stuff. But you can do like both of those at the same time to go ahead and get your stuff in order before getting to the baby step that is gonna, that would be your debt anyway. So you don't have 2 houses with no savings, and you also don't. It's probably my son telling me that he will be here shortly. Yep. Oh, so he might not get here before I'm done. No, he probably will. Near the end there. So let's see. I'm blessed. Great. 32-year-old and have 2 houses. You only need one, dog. Guess what? I have one property that is a 2-bedroom rental property in a major northeast city that I see a modest profit on every month. Not worth it. Sell it. You don't even live in that area. Sell it. And the reason he makes only a modest profit on it is that he's paying a management company. If he has a roof go out on him, then there's no profit. So it's too much risk. So sell that one regardless of what baby step you're on. I have owned since 2019 and have a 3.5% mortgage on. Yeah, so there's no business debt at all. And so to have a rental, to have a mortgage, that's a no. No. So you sell it to get rid of that mortgage, which is part of your debt. A rental property loan is not step 6 mortgage. That would be a step 2 mortgage, my friend. So that's a NAR. My second property is a condo in my city that I currently live in, South Florida. That is fine. You can keep that one, and we'll address that one later and pay it off in step 6. But in 2023, because I got a below market deal at the time, whatever. Didn't realize there was more to it. Sorry. Below market deal at the time. Bought directly from my landlord without the property ever listing, and plan to sell basically as soon as I hit the 2 years to avoid the capital gains tax and roll over whatever equity I have into something with no homeowner associations. Sure. I'm an attorney and I make between $120,000 to $200,000. Now I also own a small boat that I bought in 2021. I took out a 5-year personal loan for the boat and have approximately 18 months left of payments. Boating is my passion. I don't care. Sell it, and is what makes me happy. You can be happy when you're out of debt. So that's a nar on that one. So get rid of that too. My job is related to the marine industry, and it makes me happy to own a boat. I don't care. I don't care. You can satisfy that passion and that urge to be happy once you can buy the boat in cash. I grew up boating and keep my boat well maintained and use it frequently to major justification station here. It doesn't matter. I don't care. You are not in position to do that, to keep that. Boat costs are very high in my city. That too. It's not just the thing that you have a loan on it. It's also that it has other fees and stuff with it. The boat payment is $500 a month, and it costs me $900 a month to keep it in the marina. Yeah. You can't afford that, dog. I mean, even though you make $200,000 because you have other debt. I mean, if the house and the house, condo, and boat, if those three are your only debts, then maybe you can keep it, but you should not. Because you shouldn't have bought it in the first place in your situation. Let's see what the rest of his deal is. The problem is I bought the boat before I bought the condo. Why is that a problem? When I first bought the boat, inflation was much lower, and my rent at the time was basically a third of my current mortgage, plus HOAs. So until I bought the condo in 2023, I could easily afford the boat and still put away money each month to save and invest. So why'd you move and buy the condo? Now my mortgage plus HOA is taking up a great deal of my income each month. Yep, it is. I do not have much savings besides a few thousand. You make too much money to be that poor. I use basically all of my savings for a down payment. And you shouldn't do that either. You need to have a full, especially if you're going to be a landlord too. You don't have, for your other property, you don't have any retained earnings for that, for in case it needs a new whatever. So everything you're doing is bad here, and everything. So I mean, if you have something go wrong with the house in the Northeast, that's going to be going on debt too then. And so everything you're doing is bad, and it all happened because you said everything was fine, but then you bought the condo. But I mean, what caused you to leave? See, you can't do everything all at the same time, which people love to do. They love to do, oh, well, I'm going to buy this. I don't know what the deal was. If he had that house in the Northeast and lived there and then moved, I don't know, or found out about it somehow. If you have always lived in Florida, don't be looking for rental property in the Northeast. Or even if you've heard about, even if you weren't looking and just heard about it, don't buy stuff that far away from you, because you don't make any money because you have to pay the management company to manage it. Where were we? I do not have much savings besides a few $1,000s. Well, you should only have $1,000 while you pay off your dumb debt. You basically savings on paid down payment on the condo in 2023. I'm scraping by, only saving very little per month. I do have an employer IRA, Roth IRA, 401k that I contribute to each month. No doing that either. Everything you're doing is bad here. Everything you did is bad here. And so you got to undo it unload that rental property in the Northeast, and I'm going to advise sell the boat. Let's see, assuming no more other debt, but he doesn't like say that that's his only debt. And so, yeah, you shouldn't be investing either while you're doing it. So everything you're doing is bad. Basically, my question is, am I destroying my financial future? Yes. I bought a very modest boat that I'm happy with. Back to the boat again. I don't care. I know you like it. That's great. I'm glad you like it. No, actually, no, I don't care. Sorry, back to not caring. But it's fine that you like boats. That's great. You cannot afford it. However, the area that I own a boat is simply very expensive. Yeah, yeah. And guess what? Even though you make $200,000, as much as, not all the time apparently, but even though you can make as much as $200,000 a year, apparently it's not enough for you and your spending. I understand that a boat is not an investment, correct? And I will lose money on it, yes. But the joy of, I don't care. Again, I don't care. You don't have to keep saying it. I mean, apparently they have a justification station in Florida too, then, I guess. So yeah, I don't care. Sorry. Get your financial stuff together. Get your life together, your financial life together. And then you can buy one in cash when you're able to do so. Is it crazy to live a little thin? A little thin is a lot thin with no emergency fund. Very little savings right now with the plan to eventually get a more affordable house with. Yes, it is. It's dumb as crap. And you shouldn't have done any of it previously. And either have a house with a boat dock or just trailer it. See, just thinking about the boat. All it is the boat for this person. And sorry, my advice is not going to be to keep it. Am I absolutely destroying myself? I think so. Too much can go wrong. You're not in a great place even if nothing goes wrong. I don't want to work until I'm 90. I don't care about that either. Quit justifying. So much justification here. And don't want to be destitute when I am older. Oh, you don't? You don't want to be destitute when you're older? Well, quit doing your stupid crap with money right now then. Stop it. Deep down, I know the current monthly expenses of this boat are too much. Yeah. But I know that at least in 18 months, we don't work. If you're going to decide to fix your finances, you don't say, well, I'll get started on that in 18 months. That is as dumb as crap. So everything you're doing is bad. Everything you're doing is bad. I'm going to not owe that $500 a month. Any advice is appreciated. Quit being stupid and blinded by your stupid boat. It's a toy. Be an adult, 32-year-old. Cash Stasher, 7 crazy expenses, losing you money. Oh, this will be fun. Got the dots on it, so that means there's more. Let's see. And a name like Cash Stasher should figure that would be looking for ways to not lose money. Let's see, every month your payment disappears into rent bills, etc. Blah, 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 blah. I don't need the little preamble. So what they 7 crazy expenses are: cut your car insurance bill by as much as $1,025. Not in the state up north, you would not be doing that. That's the most expensive in the United States, but you can definitely shop around. Shop around for a comparing quotes, like the person says. Cancel unnecessary subscriptions, which is probably all of them. Unless you're using it as something that's necessary for school or work. They're probably none of them are gonna be necessary. So you can cut all of them. If you have to have one streaming service, that's fine while you're in baby steps 1, 2, and 3. After that, you get a little more leeway. It's whatever you put in your budget once you are on baby step 4, 5, and 6. Get out from under credit card debt. Of course, we know this. Protect your loved ones financially for less money. Right. Like no whole life. You want to get term life instead. All that was discussed on the Ramsey show today. Refinance your auto loan and save big. No, you pay it off. you pay it off. So you're doing it wrong, Cash Stasher. Stop paying hidden bank fees. Sure. You know what? They're not hidden. They're told to you when you sign the piece of paper, the group of papers and such. You are given a schedule of the fees that have on there, so it's not hidden. So the fact that they don't say, hey, make sure before you sign this, you look at all these fees. They give you the fee schedule. You have to be, again, an adult and look at those. And that way you don't end up like I had a customer when I worked at a bank recently. I had a customer that in the call center that called, and it turned out he got a that $1 candy bar, wanted a $1 candy bar. Didn't have any money in his account, so he went to overdraft. So that candy bar cost him $36 instead of just $1. Read all the fine print. Always read freaking bank fee schedules before you sign up for the account. Cut auto repair expenses with a low cost warranty. No warranties. Nope, no warranties. So this person here, not advising as Mr. Ramsey does. Should you live in a camper? Wouldn't be my first choice for sure. Mostly because it probably doesn't have an in-unit washer and dryer. So, I mean, I guess it just depends on how dire your financial straits are here. Let's see. This is Coolness 2024. I know Dave's usual take on trailer or camper living to save up money to build a house. Yeah, right. Yeah, I mean, no, if you would have to buy and you thinking about buying a new one, that's a nar. However, I have a different take on it. Who cares if you have a different take on it? Well, let me see. Let me not over stimulated by the two previous people that were doing it wrong. His reason against doing so is the loss in value of a camper or trailer home is terrible. No, it's not. Oh, the loss in value is terrible. Right. This is true, but if, and see, your little even if does not affect the Ramsey advice, sir or madam. But if I were to live in a camper, I'm probably not going to sell it since I love camping, and I'm justification station here, and that doesn't change the advice either. It doesn't matter what you like or want to do. The Ramsey stuff is the best thing to do. And it even says, what would Dave do here? If you know what Dave would say, then why do you have to ask a question and then put what would Dave do on here? That is dumb as crap. We're getting a lot of dummies today. So even if it loses a bunch of value, I think I'll be okay since I won't plan on it. Do you agree? Maybe, but again, everybody focuses on the okay. They'll be okay. Oh, if they buy too much house, they'll be okay. Mr. Ramsey would like you to be more than just okay financially. Are they going to be good ones? Are they going to be nice ones today? Any people that got some a debt-free scream today, and a couple people in the chat said they were debt-free today, so that was good. Let's see. Oh, should we pay off? Is that a HELOC? Home equity credit? And you got two? Home equity line of credit and you got more than one? Should we pay off HECS debt? We'll find out what that is. Buy a home or save. Seeking advice on next step. That's all right. Hi, everyone. Hi, guys. I'd love some financial advice on what to do next. My partner, 27, and I, 29, turning 30, are expecting our first child currently. I got a great idea. Get married. Currently 14 weeks pregnant, and we've made some big life changes recently. Background, probably don't need it. But let's see, I had a late start in my career to working on my family's farm for a little to nothing. Ages 15 to 27 does not affect the advice at all. The farm was sold, so I pivoted to university in late 2020. finishing my environment. None of that matters. None of that matters. I don't have time for it today. Sorry. Managed to save 35K in cash and invested 6K into stock spot. I don't know what that crap is either. Currently average 8% return since April 2024. That's probably low. That's probably lower even than the S&P 500 since then. Partners, registered nurse. How about making your partner your husband or wife, but isn't planning to return to work after our recent move? What? Because the big change with the baby coming, we decided to move back to San Antonio, maybe SA, to be near family. So I left my mining job and took a public sector job, 76 to 78K. Okay. That is much shorter hours, 7.5 hour days versus my previous 10-hour shifts. We have around $140,000 in total savings, including my partner's savings. You should not be playing house. You should not be having babies. You should not be combining finances with someone you're not married to, partner or no. The new job provided government housing. All right. $350 a week, not including utilities, in a very rural, I'm assuming, again, San Antonio town, where land home sales values likely won't appreciate. Okay. The dilemma. We both have around 35K each in HECS debt. I don't know what that is. Approximately 70,000 total. Get married first, and then we can attack it together. Given our rural temporary location, we're unsure if we should buy a house. No. If you don't know if you're going to stay there, no. That is dumb as crap. People do that crap all the time. Or focus on paying off our HES, whatever kind of debt you have. Do that. I'll look that up in a second. I just want to know what it is. Considerations buying a home? No, I don't have to read any of your bull crap there. I don't need it. Since HECS doesn't accrue traditional interest, only indexation, should we be aggressive in paying it down? Yes, it doesn't. None of the other stuff matters. Interest rate doesn't matter. Et cetera, doesn't matter. Let's see what HESS is. CS. HECS. Hunting camo and apparel? No, that can't be right. Down under, mate. But the advice for you on buying a house is NAR. No house buying. Do the baby steps. Always. That's what the answer is. Always. Unless you're in an emergency situation. Always the baby steps. So yeah, if they had said that, I could have done the whole thing in an Australian accent. Australian. Kangaroo. Invisible Arc. How to invest after debt free. Well, first we do a little thing called step 3. That's the full emergency fund. But let's see what is going on here. Oh my goodness, Di came by. Oh, I got some friends finally. Other than Marsha. What up, Di? What up, Joy? Joy said banks are sneaky. Checking account has changed a few times. Each time is like now no cost for money orders or cashier's check because I had so much with them. Okay. Di thinking about moving bank account to military veterans account. No fees for anything. That might be something to do. They live in Australia. Robert Crumb informs me. I should have been looking at that. How long ago was that? Oh, that was only 2 minutes ago he typed that. All right. So, yeah. And I eventually got to there. I had to Google it, though. I guess they have the Google in Australia. What up, James T? Hey, that's my boy. You might not want to say hi. I don't know. We'll see. He is unlocking the door. Yes, he's my key buddy since I moved back here. Hello, Max. Hello. Would you like to say hi to the stream?
Hello, stream.
Would you like to let them see your lovely face? You don't have to. You don't have to. Go on, one sec. Boom. There we go.
Hello, stream. This is my lovely face.
Max. Internet Max.
We've been acquainted.
Okay. Alrighty. Everything you need, if you want to go and eat, everything you need should be in the dishwasher.
Okay.
Everything in there is clean. There's some Parmesan bites from Domino's left in the fridge. If you want to have that with your carbonara, you can have all the rest of them.
Alright.
And the cups are right above the microwave.
Yep.
And you can open a new pop, as we call it here in the Midwest.
Okay.
All right, and you can let me know if you need anything else. You can, if you're gonna go and eat, also you can eat right behind me. You see right there, that won't be on the. That's not on the stream.
That's your lavish dinner table.
That's my lavish dinner table, at least for right now. I mean, I normally just eat here at the desk normally, since I have the table in the garage. All right, sorry guys to include you in that. But it was fun, right? Marshall says Max. And I bet my son does not know what Marshall is. I'll explain it to him later. Alrighty, where were we? Oh, how to invest after debt free. And then what he said was, how about you do baby step 3 first? So let's read it now. In a year, we'll be out of debt. People always love to think way ahead with finances. In a year, we'll be out of debt, and if you need anything, you can ask, son. Okay.
Yep.
They don't mind if you interrupt. In a year, we'll be out of debt, and with 6 to 12 months of expenses. Okay, so they're doing it. So I wasted time saying that they need to do that first because they already did it. I guess this is why you read the question usually before you start answering. I will be retiring in quotes in 20 years. Maybe a retire early person. We want to concentrate on investing after payoff of what? Oh, the payoff of the debt. Okay. But don't want to put all our eggs in the stock market. So our thought is to save to buy at least one rental property for 2 reasons. And that's perfectly fine to do. Dave would still want you to be investing 15% of your gross income into retirement. Because your rental property, who knows what's going to happen with that. Let's see, but physical asset, fine. Backup living for our kid, already saving for education, and then use the cash flow to invest. See, that's not a good enough reason to do it for something that might happen. For you to buy a rental property so that your kid can live there, that's a no. If he needs somewhere to live, then maybe you buy one at that point, and that by that time, maybe you can be out of debt. And you shouldn't be thinking about any of this stuff, spending that kind of money doing that. And as a rental property, you do not get a mortgage. You have to pay for that completely in cash if you're going to follow Mr. Ramsey's advice. That's the 2. Is there a 3? I guess that's it. And then I guess 3 didn't label it, but this is 3. And then use the cash flow to invest in the market or as emergency income if the need arises. No, you're trying to you watch too much TikTok financial advice and you're trying to game the system. That's a no. Anyone else done the math on this? When I did it, I ended up with a higher total net worth this way versus only investing in the stock market in 20 years. Okay, so the problem is that you want to retire in 20 years. So basically, you're just like the guy that called the Ramsey show today that asked how he can turn $30,000 into $300,000 in just 1 year. So, unless you're, winning the lottery, or, if you're the best person ever at day trading, you might be able to do that as well, but most aren't. It's hard to be in that 1% of day traders. Most day traders lose money instead. So yeah, so I understand but you can't change reality just because you want to retire in 20 years. Tough. You might not be able to. So what I would do, yeah, and again, you have to buy it completely in cash. So if you are under the assumption that you can get a mortgage on a property and then rent it out, that's a NAR per day, Ramsey. And did you know that, son? That's how they say no. Not all of the Australians, but most Australians, they instead of no, they say NAR, NAUR, NAR. I don't know why. Ally Online Bank or Alliant Online Credit Union. I have not used either of those, so I can't say on that. What is the reason? Is it just, I just want a good quality online high yield savings account. Everybody looking for a high yield savings account now. At the most, I just checked bank rate 4.75%. I don't know what the fine print is on that. Definitely read all the fine print on any online bank stuff or even in-person bank stuff. Always read the fine print on everything. Ally, I know Rachel recommends or uses this one. Yeah, so I mean, if Rachel's word is good enough for you, I don't think are you going to take somebody you don't know that's putting an answer in Reddit? You're going to take that over Dave Ramsey's daughter, Rachel Cruz? Seems fishy to me, Doc. This from HD8221. Oh, let's see. Marshall says, I have a very handsome young man, Max. Did you hear me, Max?
I heard.
Okay. She's a very nice lady. Sid, the kid is alive. Just got back from the store. You missed my son. Made a brief appearance, Sid, on camera. Sid says pie has to wait till tomorrow. All she has is frozen butter and need room temp. Oh, that's a shame. You could put it in the microwave or put it on the stove at low temp and thaw that bad boy out. Joy said finding reasonable cable, Wi-Fi, and cell services up by me is difficult. What are they doing up there in the state up north in Michigan, Joy? I don't hear too much complaining about it from my daughter. She also lives there. But I mean, about the car insurance, yes. But all the other stuff, when she talks to me about it, doesn't seem like there's a big problem. Oh, let's see, where were we at? Oh, looking for advice on car loan upside down, and a lot of people just can't figure this one out. And it's very simple, actually. HD8221 is the user. Have a car bought used 2 years ago, transferring $10,000 negative equity into the loan, and that's dumber than financing a car. Is transferring money that you're upside down in another car into the new loan. And so, yes, doing that constantly, that will keep you forever having a car loan, just like my mom and dad said I would. They were incorrect, fortunately. Negative equity into the loan. Not a situation where the car is too small for our family. See, again, not having no insight and taking out a loan on something that now is not even suitable because you had too many kids and looking to upsize, but not sure whether to transfer current negative equity. No, that is dumb as crap. No, into new car loan or to pay it out over the term of a lease. No lease either. No lease, no loan. You buy a vehicle in cash. And so that's probably going to be used for you. Let me know. Advice is greatly appreciated. Thank you. Car worth value now, 20K. Car note, 33K. So $13,000 upside down. Have 10K to put down. What are my best options? Use that 10K to sell the car. You put your 10K with it and 3K somewhere else that you get from some other place. Even if you have to take a $3,000 personal loan, that's fine with Mr. Ramsey, because then you get rid of a $33,000 car loan. But then you would still need another loan as well. So maybe get a $4,000 or a $5,000 loan that will give you enough to pay the underwater amount. Because you have 10, and so add the 3, and then another $2,000 for you to buy a beater that hopefully has enough seats for your family. So just because you have, more than one kid, that doesn't mean you have to get an SUV. But a lot of people think they are. Your best options are to, as always, follow the baby steps and not borrow any money ever again. Alrighty, fun times. Once again, I am Coach Steve Money. I'm a Ramsey Solution Certified Financial Coach, and you can schedule a free financial coaching consultation with me at calendly.com/Coach Steve Money. The link is in the ticker below, also in the video description. And you can make that appointment with me if you are having money problems or you just want to make sure you're on the right track. Either way is fine. You can email me, coachstevemoney@gmail.com. Any questions at all? Donations, paypal.me/Coach Steve Money, at CashApp at $Coach Steve Money, or Walmart gift card to Coach Steve Money at gmail.com. Upcoming streams until further notice, Monday through Friday. The Ramsey Show Aftershow show, it will be at 5:25 p.m. Eastern time, and that is when the Ramsey Show goes off of YouTube, and that's when I start streaming. All right, everybody, have a lovely rest of your Valentine's Day and weekend, and as always, make smart financial decisions every day. It is still recording a bit, Max. Just so you know.
I know.
Okay. Gotta wait until the stream catches up. There it goes. And stop.